Millions of people interact with Adobe products every day. Designers create graphics in Photoshop. Businesses share documents through Acrobat. Video creators edit content in Premiere Pro. For many professionals, Adobe isn't just software. It's part of their daily workflow. Over the past decade, Adobe has transformed from a traditional software company into one of the most successful subscription businesses in the world. Its products have become industry standards, its financial performance has remained remarkably strong, and now the company is positioning itself for the next major shift in technology, artificial intelligence. But what makes Adobe such a powerful compounder? And can it continue creating value for shareholders in the years ahead? In this video, we'll analyze Adobe's business model, competitive advantages, financial quality, growth opportunities, risks, and valuation. Adobe operates one of the most diversified software ecosystems in the digital economy. Its business is built around three major platforms: Creative Cloud, Document Cloud, and Experience Cloud. Creative Cloud is the company's largest segment and includes industry-leading tools such as Photoshop, Illustrator, Premiere Pro, After Effects, and Lightroom. These applications help professionals create everything from social media content and marketing campaigns to movies and digital artwork. Document Cloud focuses on digital documents and workflow management. Through Acrobat and PDF technologies, Adobe helps individuals and businesses create, edit, share, and securely manage documents across devices. The third segment, Experience Cloud, serves enterprise customers. It provides solutions for digital marketing, analytics, customer data management, and personalized customer experiences. What makes Adobe unique is that these businesses are connected by a common theme: helping people create, manage, and deliver digital content. Whether it's a designer creating an advertisement, a company signing contracts electronically, or a global brand running a marketing campaign, Adobe often plays a role somewhere in that workflow. This broad product portfolio allows Adobe to serve both individual creators and large enterprises, giving the company multiple avenues for growth while reducing dependence on any single product. Adobe was founded in 1982 by John Warnock and Charles Geschke, two computer scientists who saw an opportunity to improve how digital information was created and shared. The company's first major breakthrough came with PostScript, a page description language that became a foundational technology for desktop publishing. At a time when personal computing was still in its early stages, PostScript helped bridge the gap between what users saw on a screen and what appeared on a printed page. This innovation played a crucial role in the publishing revolution of the 1980s and established Adobe as an important software company long before the Internet era began. As technology evolved, Adobe continued expanding beyond printing solutions. One of its most significant achievements was the development of the PDF format. PDF solved a growing challenge in the digital world, ensuring documents could be viewed consistently across different devices, operating systems, and locations. What started as a document standard eventually became a critical part of global business communication. However, Adobe's evolution wasn't driven solely by technology. The company demonstrated an ability to anticipate major shifts in how software would be consumed. During the early years of the software industry, customers typically purchased software as a one-time product. But as cloud computing became more widespread, management recognized that software was gradually becoming a service rather than a standalone product. Instead of protecting the old model, Adobe chose to disrupt itself. The transition required significant short-term sacrifice, including temporary pressure on revenue growth and investor skepticism. Yet management remained focused on the long-term opportunity. The result was a business that became more scalable, more predictable, and better aligned with customer needs. Looking back, Adobe's history is not simply a story of successful products. It is a story of adaptation. Over 4 decades, the company has navigated multiple technological transitions, changing customer behaviors, and evolving competitive landscapes. Its ability to evolve ahead of industry shifts has been one of the defining characteristics behind its long-term success and helps explain why Adobe remains a major force in software today. Adobe's business model is built around turning software usage into recurring revenue. Rather than relying on one-time purchases, the company generates income through subscriptions that provide continuous access to its products and services. This approach creates a direct relationship between product value and revenue generation. As customers continue using Adobe's tools, they continue paying for access, updates, cloud services, and new features. One of the strengths of this model is its flexibility. Customers can subscribe to a single application, a bundled package, or enterprise-wide solutions depending on their needs. This allows Adobe to serve a wide range of customers while creating opportunities to expand spending over time. The company also benefits from a large installed user base that generates highly recurring revenue. Because subscriptions renew periodically, management has greater visibility into future revenue compared with businesses that depend heavily on new product sales. Beyond subscriptions, Adobe generates additional revenue through services, enterprise agreements, and usage-based offerings tied to emerging AI capabilities. As organizations increase their use of Adobe's ecosystem, revenue can grow not only through new customer acquisition but also through higher adoption across existing customers. This creates a powerful economic model. Customer relationships often begin with a specific use case, but over time those relationships can expand into broader workflows, larger teams, and additional products. As a result, Adobe's growth is supported by multiple levers: attracting new users, increasing customer retention, expanding product adoption, and introducing new monetization opportunities. The outcome is a business model that combines recurring revenue, scalability, and strong operating leverage, characteristics that have historically been associated with many of the world's most successful software companies. A great software product can achieve success for a few years. A great software business can remain successful for decades. What separates Adobe from many competitors is not simply the quality of its products, but the durability of its competitive advantages. One of Adobe's strongest advantages is its position as the industry standard across many creative professions. In design agencies, marketing teams, media companies, and production studios, Adobe file formats and workflows are deeply embedded in daily operations. In many cases, compatibility and collaboration requirements make Adobe the default choice regardless of individual preferences. Another important advantage is the company's ecosystem. Many creative projects involve multiple stages, from image creation and graphic design to video production and document delivery. Adobe participates in several of these stages, allowing customers to manage complex workflows within a connected environment rather than relying on separate vendors. Adobe also benefits from a vast library of educational content and trained professionals. Universities, online courses, certification programs, and professional training resources have collectively created a large global talent pool already familiar with Adobe's tools. This reduces adoption friction for employers and reinforces Adobe's position within the creative industry. Scale provides another meaningful advantage. With millions of users worldwide, Adobe can invest heavily in research, product development, infrastructure, and artificial intelligence while spreading those costs across a large customer base. Smaller competitors often struggle to match this level of investment over extended periods. The company also possesses valuable customer relationships built over decades. Many organizations view Adobe as a trusted software provider for mission-critical creative and document workflows. Trust becomes increasingly important when software is deeply integrated into business processes and large content libraries. Perhaps most importantly, Adobe operates within workflows where reliability, compatibility, and productivity often matter more than choosing the lowest-cost solution. For professional users, software expenses typically represent a small portion of the value created by their work. As a result, purchasing decisions are often driven by efficiency and output rather than price alone. Taken together, these advantages help explain why Adobe has maintained a leadership position through multiple technology cycles and why competitors often find it difficult to challenge the company at scale. Adobe's long-term growth potential is closely tied to the continued expansion of the digital economy. Across industries, organizations are producing, managing, and distributing more digital content than ever before. Every website, advertisement, social media campaign, product launch, training program, and digital experience requires content to be created and maintained. This trend is not limited to large corporations. Small businesses, independent creators, educators, and entrepreneurs are increasingly investing in digital content as online channels become more important for communication, marketing, and customer engagement. At the same time, the volume of content being produced continues to rise. Companies are expected to deliver content across multiple platforms, formats, languages, and audiences. What once required a handful of assets may now require hundreds or even thousands of variations tailored to different channels and customer segments. Another important opportunity comes from the ongoing digitization of business processes. Organizations continue to replace paper-based workflows with digital documents, electronic signatures, and automated approval systems. As businesses seek greater efficiency and collaboration, demand for digital workflow solutions is likely to remain strong. The marketing technology market also represents a significant opportunity. As customer acquisition becomes more competitive, companies increasingly rely on data, analytics, personalization, and customer experience management to improve marketing effectiveness and strengthen customer relationships. Artificial intelligence may further expand Adobe's addressable market. Historically, advanced creative tools were primarily used by trained professionals. AI-powered workflows have the potential to lower barriers to content creation, enabling a broader range of users to produce professional quality work more efficiently. In other words, AI may not only improve productivity for existing customers but also increase the number of people capable of creating digital content. Taken together, these trends suggest that Adobe's opportunity extends beyond gaining market share from competitors. The company is also participating in markets that continue to grow as businesses, creators, and consumers become increasingly digital. For investors, the key question is not whether digital content will remain important, but whether Adobe can continue capturing value from the growing demand for creation, communication, and digital experiences in the years ahead. Ultimately, a company's competitive position should be reflected in its financial performance. For Adobe, the numbers tell the story of a business that has consistently translated growth into profitability and cash generation. Over the past decade, the company has delivered steady revenue expansion while maintaining attractive profit margins. Unlike many software businesses that prioritize growth at the expense of profitability, Adobe has demonstrated an ability to achieve both. One of the most notable characteristics of Adobe's financial profile is its margin structure. Because software products can be distributed to millions of users with relatively low incremental costs, a significant portion of additional revenue can flow through to operating income and free cash flow. This creates a business that becomes increasingly efficient as it scales. Adobe also generates substantial free cash flow, providing management with considerable financial flexibility. Strong cash generation allows the company to invest in product development, pursue strategic initiatives, and return capital to shareholders without relying heavily on external financing. Another important indicator is the company's return on invested capital. Over time, Adobe has consistently earned attractive returns on the capital deployed in its business, suggesting that management has been able to allocate resources effectively while maintaining economic value creation. The balance sheet further strengthens the investment case. Compared with many businesses that require significant physical assets or ongoing capital expenditures, Adobe operates with a relatively asset-light model. This allows a larger portion of earnings to be converted into cash that can be reinvested or distributed to shareholders. Perhaps most importantly, Adobe's financial performance has remained resilient through different economic environments. While growth rates may fluctuate from year to year, the company has historically maintained strong profitability and cash generation, reflecting the essential role its products play within customer workflows. For long-term investors, these characteristics are often associated with high-quality compounders, durable revenue growth, strong margins, robust cash flow generation, attractive returns on capital, and a business model capable of creating value over extended periods of time. A great business does not automatically become a great investment. Much depends on how management allocates the capital generated by the business. For Adobe, capital allocation has historically focused on balancing innovation, strategic expansion, and shareholder returns. The company's first priority has been reinvestment. Software is a highly competitive industry, and maintaining leadership requires continuous investment in research and development. Adobe has consistently devoted resources toward enhancing its products, expanding capabilities, and adapting to changes in technology. Beyond internal investment, Adobe has also used acquisitions to strengthen its strategic position. Rather than pursuing growth for its own sake, management has generally targeted businesses that complement existing capabilities, expand product offerings, or improve Adobe's relevance within important customer workflows. This disciplined approach has helped the company evolve alongside changing industry trends while avoiding excessive diversification outside its core areas of expertise. Another important aspect of Adobe's capital allocation strategy has been share repurchases. Over time, the company has returned a meaningful portion of its excess cash to shareholders through buybacks. When executed at reasonable valuations, repurchases can increase each remaining shareholder's ownership stake and enhance long-term per-share value creation. Management's decision-making can also be evaluated through its response to strategic challenges and market shifts. The software industry evolves rapidly, requiring leaders to make decisions with long-term consequences despite uncertainty. Adobe's willingness to adapt its strategy when industry conditions change has been an important factor behind the company's longevity. Importantly, the company has generally avoided the temptation to pursue aggressive expansion at the expense of financial discipline. This has allowed Adobe to maintain a strong financial position while continuing to invest in future growth opportunities. For investors, effective capital allocation is often one of the defining characteristics of successful compounders. While products and technologies may change over time, management's ability to deploy capital intelligently can have a lasting impact on shareholder returns. Adobe's track record suggests a management team that has generally prioritized long-term value creation over short-term results, a characteristic that many long-term investors view favorably. Artificial intelligence is reshaping the way digital content is created, edited, and distributed. For Adobe, the emergence of AI represents one of the most important technological shifts since the transition to cloud software. The company's objective is not simply to add AI features to existing products, but to integrate AI throughout the content creation process. Traditionally, producing high-quality content required significant time, technical expertise, and manual effort. AI has the potential to automate repetitive tasks, accelerate production workflows, and allow creators to focus more on ideas and creative decisions rather than execution. This shift could fundamentally increase productivity across the creative industry. Adobe's approach differs from many standalone AI providers. Rather than competing solely on model performance, the company is focused on embedding AI into established professional workflows where content is already being created, reviewed, and delivered. This allows AI to function as an enhancement to existing processes rather than a separate destination. Another important consideration is commercialization. Many AI tools have attracted users but continue to face challenges converting engagement into sustainable revenue. Adobe enters this transition with existing customer relationships, distribution channels, and monetization infrastructure already in place. As AI capabilities become more valuable, the company may have multiple ways to capture economic value, whether through premium features, usage-based pricing, or expanded product offerings. AI may also influence the structure of the broader creative market. As content production becomes faster and more accessible, overall demand for digital assets could increase significantly. Organizations may create more marketing campaigns, more personalized content, and more variations tailored to different audiences and platforms. In such an environment, efficiency becomes increasingly important. Companies that help customers manage larger volumes of content while maintaining quality and consistency could become even more valuable. Of course, the long-term impact of AI remains uncertain. Technological change often creates new opportunities while simultaneously altering competitive dynamics. The winners are not always the companies with the most advanced technology, but often those that can integrate new technology into products customers already rely on. For Adobe, the AI era is not simply about adopting a new toolset. It is about ensuring that the company remains relevant as the economics and workflows of digital content creation continue to evolve. The success of that effort may play a significant role in determining Adobe's growth trajectory over the next decade. Despite its strong business fundamentals, Adobe faces several risks that investors should carefully consider. The first is the risk of slowing growth. As companies become larger, maintaining historical growth rates becomes increasingly difficult. Adobe already serves a significant portion of its addressable market, which means future growth may depend more on expanding customer spending and entering adjacent opportunities than on rapid customer acquisition alone. Another risk is increasing competition. The software industry remains highly dynamic, with new entrants regularly introducing alternative solutions. Some competitors focus on simplicity and affordability, while others target specific niches with specialized products. Even if these competitors do not threaten Adobe's core position, they may place pressure on growth in certain segments of the market. Technological disruption also remains a key consideration. Throughout the history of software, industry leaders have occasionally been challenged by new technologies that change how users interact with digital tools. While Adobe has successfully adapted to previous industry shifts, there is no guarantee that future transitions will be equally successful. Execution risk is another important factor. Adobe's future growth depends on management's ability to identify changing customer needs, allocate resources effectively, and execute strategic initiatives successfully. Even strong businesses can experience periods of underperformance if execution falls short of expectations. The company also faces enterprise spending risk. Many organizations periodically reassess software budgets during periods of economic uncertainty. While Adobe's products often represent a small fraction of overall operating expenses, slower corporate spending can still influence purchasing decisions and contract expansions. Regulatory and legal risks should not be overlooked. As software companies become larger and more influential, they often face increased scrutiny related to competition, intellectual property, data usage, and other regulatory matters. Changes in regulations could affect operating flexibility or increase compliance costs over time. Finally, investors should consider valuation risk. A high-quality business does not automatically translate into a high-return investment. When expectations become overly optimistic, future shareholder returns may be constrained even if the underlying business continues to perform well. For long-term investors, the key question is not whether risks exist, they always do. The more important question is whether Adobe's strengths are sufficient to navigate these challenges while continuing to create value over the years ahead. Valuation is often where even great businesses become questionable investments. There is little debate that Adobe is a high-quality company. The more important question is how much investors should be willing to pay for that quality. To estimate fair value, we can look at several possible scenarios based on future growth expectations and long-term business performance. Conservative scenario, $230 per share. This scenario assumes slower revenue growth, increasing competition, and more modest profitability improvements over time. In this case, Adobe would remain a strong business, but future growth would not be sufficient to justify premium valuation multiples. Under these assumptions, fair value is estimated at approximately $230 per share. Historical scenario, $320 per share. The historical scenario assumes Adobe continues executing broadly in line with its long-term track record. Revenue growth remains healthy, margins stay strong, and the company continues generating significant free cash flow. Based on these assumptions, fair value is estimated at approximately $320 per share. This serves as our base case valuation. Optimistic scenario, $640 per share. The optimistic scenario assumes Adobe successfully captures substantial value from emerging growth opportunities, particularly in AI-enabled content creation and enterprise workflow expansion. In this case, growth accelerates, operating leverage improves further, and investors continue assigning premium multiples to the business. Under these assumptions, fair value could reach approximately $640 per share. Investment perspective. As with any valuation model, the outcome depends heavily on future assumptions. Small changes in revenue growth, margins, or investor sentiment can lead to very different estimates of intrinsic value. Rather than focusing on a single number, investors should view valuation as a range of possible outcomes. Based on our analysis, a reasonable fair value estimate for Adobe is approximately $320 per share, with a downside scenario near $230 and an upside scenario approaching $640. The market's current price will ultimately determine whether Adobe represents an attractive opportunity today. The business itself has proven its quality over many years. The remaining question for investors is whether the current valuation offers a sufficient margin of safety relative to the company's long-term potential. Adobe is not a company built around a single product or a short-term trend. Over the past 4 decades, it has repeatedly adapted to major shifts in technology while maintaining a leading position in digital content and document workflows. The company operates in markets that continue to benefit from long-term digitalization, generates substantial cash flow, and possesses many of the characteristics investors typically associate with high-quality compounders. At the same time, Adobe is entering a new phase of its evolution. Artificial intelligence has the potential to reshape how content is created and managed, creating both opportunities and uncertainties for the business. The company's ability to integrate new technologies while preserving its economic strengths will likely play an important role in determining future shareholder returns. From an investment perspective, Adobe represents a classic quality versus price discussion. The business itself demonstrates strong fundamentals, attractive economics, and a long history of execution. However, long-term investment success depends not only on owning great businesses but also on purchasing them at reasonable valuations. Based on our analysis, Adobe's intrinsic value appears to be around $320 per share, with outcomes ranging from approximately $230 under more conservative assumptions to $640 under a more optimistic scenario. For investors seeking durable businesses with strong competitive positions and long-term compounding potential, Adobe remains a company worth following closely. The investment decision ultimately comes down to a simple question. Can Adobe continue creating more value over the next decade than the market currently expects? If the answer is yes, the company may continue rewarding patient shareholders just as it has for much of its history. And that is why Adobe remains one of the most compelling software compounders in the market today. And as always, do your own research and invest according to your own risk tolerance and investment objectives. If you enjoy deep dives into high-quality businesses, consider subscribing for more business and compounder analysis on companies that have the potential to create long-term shareholder value. And share your thoughts in the comments below.